we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Grayscale speaking about China's stance against crypto. Does China have a stance against crypto, or is China leading this crypto revolution? Blockchain, tokenization, robots, algorithms, drones, the fourth industrial revolution. The Hegelian dialectic is being played perfectly. We know that the hash rate of China from Bitcoin is for a reason. If Bitcoin was going to make all this money, why wouldn't China keep it? Guys, it only makes perfect sense. We know that digital yuan is going to be the new reserve currency. Like I always state, cryptos are for the robots. But this digital yuan is going to be attached to this digital SDR that's going to run this whole economy. And remember, the Crypto Teacher told you, I've done plenty of videos on Belt and Road. We see with our own eyes, America, the Babylon is falling, and China, the drag is rising. Because we know, when it comes to the New World Order, it's all planned out. You have a wonderful day.
But what do you make of the fact that this is a futures product as opposed to a product that actually buys the underlying asset, and whether you think the SEC is going to come in and ultimately regulate that? What are you hearing? I know you have all sorts of lobbyists and other people who are working behind the scenes talking to various regulatory agencies about this.
Well, I think that there is a lot of excitement about regulators finally allowing a Bitcoin anything onto a national securities exchange. That being said, when you look at the structure of a Bitcoin futures product, there is going to be an impact to investors. You have to look at things like roll costs, moving from one contract month to the next. And when there's a commodity like Bitcoin, which can be stored quite easily the way that something like gold can, it typically makes more sense for investors to access it through a physically backed product than maybe something like oil, which is perhaps harder to store. Thus, a futures-based product may make more sense for it. So it's too early to say, but certainly I think investors should have the optionality to access Bitcoin through both futures as well as spot.
Michael, what's the chance that this pulls money away from your own fund? Which is to say, as institutional investors start to think about investing in this space, historically, they didn't have a lot of places to go. One of the places they went was your fund. Now they'll have something else.
Well, I think investors have typically gone into products like GBTC. Today, this is the world's largest Bitcoin fund. It holds over about 3.5% of the outstanding Bitcoin supply. And so I think the success of this product over the last 8 years really is evidence that a physically backed product is the way that investors want to access this. And ultimately, having both those options in the market, I think, is a good thing for the ecosystem overall.
But can you give us a little bit of a sense then, if you have been in this space for 8 years, where you think we genuinely are in the cycle? There have been, as you know, there have been great, what you might describe as Bitcoin summers or solstices or whatnot, and then there have been, long winters.
Sure. I think the familiarity and the protections of an ETF definitely stands to draw in more capital and more investors into this ecosystem. There has been a lot of excitement, again, GBTC, a lot of other ways for investors to access this industry and this asset class.
Right.
But as you have more of these familiar wrappers coming into the market, that will draw in more capital. And, obviously we think that that could be very bullish for the asset class, given that you're talking about a scarce asset. Right?
Do you think there's any chance that we could see an ETF, an Ethereum ETF futures product?
I think that the regulatory community has become increasingly comfortable with the fact that digital asset futures are regulated by the CFTC.
But do you think there's a difference? How would you, if you were to sort of handicap how the SEC or others might think about an Ethereum futures product versus a Bitcoin futures product, how would you talk about or frame that conversation?
Well, regulators have been very proactive, working with industry participants like us. I think certainly they've taken their time and been very methodical about introducing now what will be the first Bitcoin futures product. And so I think it stands to reason that they will also be very proactive and thoughtful about bringing Ether or other products into the market as well.
And then finally, do you think this new ETF makes it harder for the Chinese crackdown to continue?
Well, I think what we've seen out of China, again, is really yet another round of a prohibitive stance against the asset class. Time and again, the resiliency of this community has moved mining hash power to other parts of the world, trading volumes to other parts of the world. And I think we're seeing yet another cycle of that, which we view as a good thing for the ecosystem to smooth some of that out and not have it be so concentrated.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends. So therefore, we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.